Hey, this is jsock, owner of Sock Mortgage, and I'm here today to talk about the steps to getting a mortgage. If you are buying a home or doing a refinance of your existing mortgage, you may be wondering how the whole process works. Knowing where you are in the process and what the next steps are can be very helpful and very informative. Let's begin with step one, which is submitting an application. Now you can complete an application online, in person, or over the phone. Once you've submitted an application, I will contact you to ask some additional questions about that application. This will take us to the next step, which is seeing how much you qualify for, or step two. Now, if you're buying a home, we can provide you with a pre-qualification or a pre-approval letter so that you know how much money you can borrow so you can go and look at homes with your realtor. Now, when you're refinancing, it's a little bit different. When you're refinancing, you may simply just be wanting to find out, can I change my term, lower my rate, go from a fixed rate to an adjustable or vice versa? Or I may just want to be in the position where I take some cash out of my property and do a cash out mortgage. This will just depend on what you want to do and what your current situation is. But whatever you want to do, you'll need to make sure you know how much you qualify for and if you're actually approved to do the loan. Whether you are buying or refinancing, we're going to ask you some initial questions, like how much you earn, how much you have in savings, how much you owe on your credit cards, cars, student loans, what your credit score is, things like that. This will help us find out programs that are available for you and how much you qualify for, and if you even do qualify. This will take us to the next step, or step three, which is documentation and documentation review. So step three begins with us requesting and reviewing some documentation. This is the information we will need to qualify you for your loan. I will tell you exactly what we need and make it quite simple for you to send it to us. Now, you may work with a loan officer or a loan assistant who will be handling this portion of the file. The loan officer or loan assistant will review the documentation you have submitted to ensure that the file is complete and accurate to approve you. They will confirm your income, your assets, and credit to ensure that you are eligible for the loan that you are looking to obtain. Keep in mind, this documentation may vary from borrower to borrower on the loan, or from even loan program to loan program. But once you have given the initial information and this review comes back clean, we will be able to select your loan program and send you paperwork that we're going to just call disclosures during this process. And that will take us to the next steps in the loan process, which is going to be step four. Now, step four is your disclosure process. Now, these disclosures will contain a document in it that's very important called the loan estimate. And this will include all of your costs in the loan. The loan estimate is a 3-page disclosure that details the costs associated with the mortgage loan. There are other disclosures that are required by law to be sent, but it is important to review these disclosures and let me know if you have any questions at all. You must let me know that you have received and reviewed these disclosures and that you are ready to move ahead with the loan. This document in there is going to be called the intent to proceed. The intent to proceed is technically step 5, which we'll get into in just a second. Now, the intent to proceed is usually completed electronically in your disclosures. Now, what this document means is that you are ready to move ahead in the process and you have chosen us to be your lender. Once you sign all of those documents, we're moved right on into step 6, which is nice and easy, and that's ordering the appraisal. So once you've electronically signed the initial paperwork, your home appraisal will be ordered. Now, this will change depending on what type of loan you're doing. So some loan types allow for an appraisal waiver. And if you're fortunate enough to receive one, we will let you know because we won't order an appraisal and we won't have to charge you for one. The first step is getting the appraisal appointment set. Now, this changes. If you're doing a purchase, this will be handled between the buyer's agent and the listing agent and the appraiser. If you're doing a refinance, the appraiser will call you directly to set a time that is convenient for you to have your home inspected. Again, whether you're purchasing or refinancing, this step will change or could change. Make sure you reach out to your loan officer for the exact steps on what we need there. Now, once your appraisal is ordered, we're going to actually go ahead and gather the rest of your documentation and submit it to underwriting, which takes us to step 7. Now, step 7 is underwriting the file and processing the file. So once all documentation has been received that's been necessary to support the information in the loan file, and you have your disclosure signed and your appraisals ordered, this gets sent to the underwriter for the approval. In most cases, After underwriting is done, an initial approval or a conditional approval will be issued. This means that the file is approved, but the approval is subject to certain items or conditions you'll see. We will let you know if there is anything else we need from you. Now, time is of the utmost importance. So if we contact you for additional information, you will want to make sure you respond to us in a timely manner so it keeps your file moving forward. Now, the underwriter reviews the validity of the appraised value, calculates income used for the loan, and runs various loan fraud checks to make sure everything checks out. If questions arise during this review, the underwriter will request follow-up documentation from us that we will communicate to you. So don't be alarmed if this comes up. This is very common that conditions will be added during the loan process. Now, communication is key. In a purchase transaction, many moving parts must come together at the same time for the file to proceed to a smooth close. Sellers, buyers, real estate agents, title companies, all have tasks and responsibilities that must be coordinated. It is very important for us to remain in close contact with all parties involved during the process and to make sure each one is aware of any potential pitfalls or delays that might arise throughout the loan transaction. There's another disclosure that we have to get out to you at least 3 business days prior to closing the loan. This is called your closing disclosure. This typically is one of the final documents you sign before your loan is clear to close. It's important that you acknowledge receiving your closing disclosure immediately. We will work with you and let you know when you can expect the closing disclosure and how to acknowledge it. Again, it is very important because there is a 3-day waiting period between the time you acknowledge receiving the closing disclosure and the time that you're legally allowed to close and sign your loan. Again, this is very important that it gets done as soon as possible and you take care of it once you receive it. Our next step here is step 8. This is closing. Now, this is what we've all been waiting for. Once the file has been given a clear to close by the underwriting department, it moves then to the closing department. In a refinance transaction, closing is scheduled with you, the borrower, directly. We inform the title company and the closing department requests the date and time. In a purchase transaction, the closing date is negotiated between the buyer and the seller of the property. And that date is normally included in the sales contract, but this can move up or be pushed back depending on the file. Once the title company receives closing instructions, they will work with us directly to prepare the final closing documents. Now this takes us to step 9, which is funding the loan. Once the documents have been signed and on a refinance, the 3-day rescission period is passed, the loan is ready to disperse. If you're doing a purchase loan, the nice thing about SOC Mortgage is we are able to fund your loan immediately, which means we have no funding authorization numbers and no prior to funding conditions. So the day that you sign is the day that our money is out there and the checks are cut, and hopefully you're getting the keys to your new house. Now again, there's a lot of steps to the loan process, but the great news here is that our team at SOC Mortgage is here to help you throughout the entire thing. A lot of lenders out there will take anywhere from 30 to 45 days to close your purchase loan or your refinance. Here at SOC Mortgage, we've been able to cut that down to 21 days or less on most transactions. Hey, thanks again for watching. This is John Sock, owner of SOC Mortgage, and you can connect with us online at sockmortgage.com. You can find us on Facebook, Instagram, or Twitter, or you can see some more of our great videos here on our YouTube channel at SOC Mortgage. If you have any questions or want to reach out to me directly, please feel free to call 586-371-6104 or email at jsock@sockmortgage.com.